Dear students, let us understand the effect of cash flow from the different activities on the basis of the different transactions with the help of this example. For each of the following transactions, calculate the resulting cash flow and state the nature of cash flow, whether it is operating, investing, and financing. You have been given different examples, and on the basis of understanding of these different examples, you could have to calculate that whether the cash inflow is there or outflow is there, and whether cash inflow is from operating activities, investing activities, or from financing activities. A transaction is given: acquired machinery for rupees 2,50,000, paying 20% drawn and executing a bond for the balance payable. What we mean by this transaction, that the organization has purchased a machinery for rupees 2,50,000, which is a part of non-current asset, paying 20%, means cash in hand given 20% that 50,000 had given, and executing a bond for the balance payable, and for the balance they had accepted a bill, executing a bond for the balance payable. Now what we have the working here, that we had purchased a machinery. Now purchase of machinery is a part of investing activities and it is the outflow. Now it is immaterial that how much we had paid in cash and how much we had accepted bills payable. Here we have to just see that what is the nature of this. Nature is that it is investing activity, and second thing, that it is relating to what, whether inflow or outflow. It is the outflow because it is a purchase of machinery. Come to the second transaction: paid rupees 2,50,000 to acquire shares in Inform Tech and received a dividend of rupees 50,000 after acquisition. Please understand, paid rupees 2,50,000 to acquire shares. So it is the purchase of the share. We had purchased the share. So automatically, and what we had did and received a dividend of rupees 50,000 after acquisition. We had purchased these shares in terms of acquisition of the other company, that we had purchased the other company. What we had did, amount paid for acquiring shares 2,50,000, and dividend received in return 50,000. So net cash used or outflow is rupees 2 lakh, and it is from which activity? It is in cash used in investing activities, because the cash has been paid for the purchase of the acquiring shares. Let's over to the third transaction: sold machinery of original cost rupees 2 lakh with an accumulated depreciation of rupees 1,60,000 for rupees 60,000. Please understand, there is sale of machinery. When there is sale of machinery, automatically there is inflow of the cash. And now when there is sale of machinery, this inflow will be from which activity? It is from the investing activity, because purchase and sale of non-current assets is associated with the investing activity. So when we sell this machinery, it is the inflow of the cash from, most important thing, investing activity. Now question arises with how much amount. The original cost of the machinery was rupees 2 lakh, and on this accumulated depreciation was rupees 1,60,000, and it is sold for rupees 60,000. So the selling price is 60,000. So there is the inflow from the investing activity, that is for the sale of machinery, and the amount will be shown rupees 60,000 on sale of machinery as a part of investing activities. Now I will share with you one complete question relating to the additional information. As I told you that some questions to be taken with reference to the additional information, and how those questions to be taken up. Let's see additional activities and the additional information and the solution of those different type of the problems. Here see, we will go for this question number here given. See here, this is the question. The balance sheet is given to you, and on the basis of that balance sheet, you have to prepare balance sheet of Rajeshwar Limited as on. You have been given this balance sheet. Additional information is given. Dear students, you already know how to prepare the cash flow statement. Here main we will consider to the additional information. See the information given in the balance sheet, and one by one we solve all these steps. First step is the calculation of cash flow from operating activity. We start with the net profit before taxation here, and here see the years are given in the order base year, current year, base year, current year, and then the profit and loss account given in the liability side, it is a profit. So the profit for the last year is rupees 1,60,000. Profit for the current year is 2 lakh. So automatically there is increase to the tune of rupees 40,000. So 40,000 is the profit which is earned during the current year. So here we will start with the net profit 40,000, that is the difference. Or you may take rupee 2 lakh is the total amount of profit for this year. Deduct 1,60,000 the previous year profit balance. Result will be same 40,000. Now what we have to do? We have to get it net profit before taxation. Now come across a very important information which is given here. That is the proposed dividend of last year is given 60,000 and of current year is given 70,000. In my previous video, I told you how to adjust or how to treat the proposed dividend or the amount of provision for dividend. Current year total provision will be added back to the net profit while calculating cash from operating activity, and the last year total amount will be shown as outflow of the cash in the which activity? In the financing activities, because it is assumed that the last year total dividend being paid by the company. So current year total amount will be added back here, and last year total amount will be shown as outflow in the financing activity. See here what we have did here. We had added 70,000 here as the proposed dividend, and what we added for the 60,000, that is the last year amount of the dividend. We had assumed that last year amount of dividend has been paid. See here, and it is given under the cash from financing activity. It is outflow, so it is shown in minus, and it is added back as a part of the profit before taxation. So this is the treatment relating to the proposed dividend. Now what we have to do next in the cash from operating activities? We have to make the adjustment relating to the non-cash and non-operating expenses. Now which they are? First it is given depreciation 70,000. How that amount of depreciation is there? Very simply, see here, the opening balance in the depreciation account is given how much? 80,000. Closing balance is given 1 lakh. In the additional information given, that machine costing rupees 80,000 on which accumulated depreciation was 50,000 was sold for rupees 20,000. So accumulated depreciation on this machinery was 50,000. When this machinery being sold, automatically its depreciation will also be deducted from here. So out of 80,000, a machine on which accumulated depreciation was 50,000 being sold, so the depreciation account closing balance must be 30,000. 80,000 opening balance minus 50,000, 30,000. But actually it shows how much? 1 lakh. So automatically 70,000 being the amount of depreciation which is charged during the current year. So see here 70,000 being added back as non-cash item, because 70,000 is the provision of depreciation which is made during the year. So this way 70,000 will be shown in this. See here how we will show here. We will have a separate account for depreciation, and in that we will show where in the credit side we will write the opening balance 80,000. In the debit side we will write the closing balance 1 lakh, and 50,000 the amount of depreciation will be debited to this account. Result will be there that the 70,000 will be shown as the amount of provision for depreciation during the year, right? After the 70,000 being added back, then loss on sale of machinery, that is 10,000. How it had came? Very simply understand. Original cost of the machinery was rupees 80,000. Already depreciation charge on this machinery was 50,000. So the book value of the machine as per the books was 30,000. But it is sold for rupees 20,000. So automatically there is a loss of 10,000. 80,000, the original cost. Depreciation charge 50,000. Automatically the book value of the machine was 30,000, but it is sold for 20,000. So 10,000 is the loss on machinery that been here debited. So here we will get the operating profit before the working capital changes 1,90,000. Now we have to adjust the effect or take the effect of the working capital changes, and working capital changes effect to be taken without the item of cash and cash equivalents. And these are their debtors, bills receivable, very simply creditors here only, because bank loan will be taken as the long-term liability. And what is the rule for taking the effect is that if there is decrease in the current asset, that will be added, and if there is increase in the current asset, that will be deducted. While in case of the current liabilities, if there is increase in the current liability, that will be added. If there is decrease in the current liability, that will be deducted. Here see how the effect will be taken. Debtors 40,000 being added because they are decrease in the debtors. Increase in the asset stock being increased, so 20,000 being reduced. Again the bills receivable being increased, see here, so 10,000 being also deducted. See here, bills receivable 20 to 30, it is increased, they are current asset, so they been deducted here. Now come to the effect of the current liability. Creditors being decreased. Last year creditor balance was 1,40,000. Now it is 120. So they been decreased. So 20,000 been here shown as deduction. Now when we mutually adjust these items, cash from operation comes rupees 1,80,000. Now we come for the second item, second head, cash flow from investing activities. Proceed from sale of fixed asset. That is inflow of the cash, that is 20,000. So it will shown in the plus item. Purchase of fixed asset 2,80,000. We will prepare the asset account. Opening balance 4 lakh. Closing balance 6 lakh. Out of which a machine having a original cost of 80,000. That is, it is given in the statement itself that a machine having original cost of 80,000 being sold. So automatically when we sell this, so we will show here by bank 20,000 cash received, by profit and loss 10,000, by accumulated depreciation 50,000. So the balancing figure will be the amount of the purchases made during the year, that is rupees 2,80,000. So this way we will find out the purchase, and we know purchase is the outflow of the cash, and it is under which head? It is in the heading of the cash from the investing activity. So inflow is 20,000, outflow is 2,80,000. So the net effect of the cash from investing activity is rupees 2,60,000 in the minus, and this is cash used or outflow from the investing activities minus balance rupees 2,60,000. I will continue in my next video relating to the next part of the question.